Well, good afternoon, students. We'll have a discussion. This is more similar to what we did in our derivatives, futures, and forwards market to market analysis. So, NAV calculations were done in the previous class, and we know how is it done and what is the relevance of net asset value calculation. So in this today's session, we'll discuss about how M2M analysis helps in order to know whether our investment is making money or not in the given mutual funds. So basically, we have to follow a brief outline, and we'll have to carry out the calculations accordingly. So this brief introduction will give you how is it processed, and later I'll take up two examples which will give an idea how do we do M2M analysis in the mutual funds. So you'll be given this type of a data. Say example one, wherein you have been given the NAV of HDFC balance fund, and the present NAV is rupees 148.92 per unit, and you have decided to invest a lump sum amount of rupees 10,000. So this is the basic information you will get, and along with it, you will get this type of a data, wherein you get some 5 or 7 or 10 days NAV, and based upon this change in the value, we have to calculate the daily gain and loss, cumulative gain and loss, and the account balance on each and every day. Why do we do this? Because NAV calculation is done on daily basis, and any change in the price of your mutual fund unit will be reflected every day. And in that regard, we have to calculate what is our daily gain and daily loss with respect to changes in the NAV. So to start with this, how do we do? First of all, we have been given three basic information. One thing is the present NAV. We have been given the amount what we want to invest in and the respective NAV prices. But we don't have idea about how many units we could own. And based upon that, we are going to do the further calculation. So the first step in this regard is you have to first of all find out the number of units what you owned, and it is done with the help of the basic information. We have been given this amount invested, and even we have been given the NAV, that is open price or value of NAV. So this is given it to us. Now based upon this, we find out number of units what we owned it. Then how do we find out the opening balance of your account? So it is nothing but the lump sum amount what you have invested, or else you have found out how many units you own, and even we know what is the opening price of the NAV. So if you do that multiplication over here, you get again the opening amount balance for your account in the mutual fund scheme, or else it is simply the amount what you want to invest in. So either way we can do that. Now what is important is change in the value, and it is done on daily basis, on successive basis as such. So change in value is nothing but it is the difference between the present value of NAV minus the past or yesterday's value of your NAV. So it is something like the future price today and the future price yesterday, or it is based upon those successive changes in the price accordingly. So this is the equation. Change in value is nothing but the difference of present minus yesterday's NAV price. It could be plus or it could be minus depending upon the changes what we realize. So P1 is nothing but the present or today's NAV price or value, and P2 is nothing but the past or yesterday's NAV price or the value of your unit. Then how do we calculate daily gain and loss? We have to do it on the aggregate basis. The change is done on unit basis, but daily gain and loss will be done on the aggregate basis. So we have calculated what is the change in the value of your NAV, and we know what are the number of units we own. So this we need to multiply, and we get the daily gain and the loss. So this is how this M2M analysis is done for the mutual fund investments. Now we go further and we do this example. Now we will see what is given. So we'll read the first example. NAV of SDFC Balance Fund is quoted at rupees 148.92, and you have decided to invest a lump sum amount of rupees 10,000. So we have to show M2M analysis for the following data. So what is the given data? Given data is amount to be invested equal to rupees 10,000. Present value of NAV is equal to rupees 148.92 per unit. Now what we have to do, we have to find out the solution. So solution goes like this, that is number of units owned is equal to 10,000 divided by 148.92. So it is simply nothing but the amount what you're going to invest in and the present price. Do the calculation. So it is 10,000 divided by 148.92, which is equal to 67.15 units. So we are going to own 67.15 units at this price with the investment of 10,000 rupee. So this is number of units what we have owned it. Now the next thing is opening account balance. So opening account balance is NAV is 148.92 into number of units owned, that is 67.15. That is equal to again 10,000. So what is next? It is change in value. So change in value we have to compute for every day. Now we have to make a table for M2M analysis, and we will be given these dates or the days and the NAV price accordingly. So we have to insert this additional columns, like say the change in value, daily gain and loss, cumulative gain and loss, and the account balance as such. So we have got open prices 148.92, and we have been given these prices and the dates are given. So the first opening value, there won't be any change in value, there won't be any gain or loss, there won't be any cumulative gain and investment you have made, opening balance that will be there. Now when we come to 9th April, we have been given the data from 9th April to 19th April, and we have to do the NAV. What is the change? So it is P1 is this one, 148 minus your P0.92. Calculate. So it is 149.92 minus 140. Sorry, it is 149.40 minus 148.92. So the change is this much, 0.48. Now how do we calculate daily gain and loss? So it is this equation. So we know what is the change in the value. It is 0.48. And how many units we own? 67.15. And if you take a product of it, it is 32.23. So I'll make it simple. I'll have only two decimals. So this is a daily gain for the 9th April. So we don't have anything previously, so the cumulative gain will be the same, 32.32. And your daily gain is there. There is no loss. So your account balance will be 10,032.23 rupee. So this is on 9th of April. But when we do it on 10th of April again, so this will become P1, that is 149.49, and your P0 will become previous, because you have to take successively. It is not that always you have to take opening balance as 148 only, and that is the P0. So it goes on changing every day. So it is now 149.40. So what is the difference? It is 0.9. 0.09. You can calculate 149.49 minus 149.40. So this is 149.49 minus 149.40. So it is 0.09. So again multiply by, so it is 0.9 multiplied by the same number of units will give us 67.15. So it is 6.04. It will be 38.27. And again, you're going to increase your balance by 6 rupee 4 paise. So this is what. Similarly for the 9th, similarly for the 11th April, we have to do now. So it will be 149.19 minus previous is 149.49. So here we have a loss, that is on a 0.30. So 30 paise loss we have got on this day. So that again you have to multiply with 67.15. So the loss will be this much, 20 rupees 14 paise. So now cumulative gain and loss will change now, because on 11th April we have realized a loss. So we calculate what is the value. So it is 38.27 minus 20.14. So it is 18.13. So similarly, your account balance will also change, because you have made a loss today. So it will be 10,018.13. That is for 11th. So now 12th we have to do. So it is 149.19. So there is a gain of 16 paise, or there is a change in the value. So this is multiplied by 67.15 will give us 10 rupee 74 paise gain. So this we have to add up now. So it will be 28.87, and this will be again 10,028.87. Now 13th April, we have to do it for the 13th April. 149.35. It is 149.43 minus 149.35. It is a gain of 8 paise. And again we multiply 67.15. So it is this much. So this amount again we have to add up over here. So 28.87 plus 5.37 this much. So this value will also change. Before. Now we have to do it for 16th April. 149.71 minus 149.43. So it is 0.28 paise. This is multiplied by 67.15. So it is 18.80. So this we have to add it to the 34.24 plus 18.80. So it is 53.04. So here also it will change. So this is what on this date 13th will be 149.9 minus 149.71. So 19 paise is the change, then multiplied by 67.15. So it is 12.76. So we add up 4 plus 12.76. So it is 65.08. So the last April 149.59 minus 149.9. So there is a loss of 31 paise. A change is there. So this multiplied by 60.17. So the overall loss is 20 rupees 81 paise. So 65.80 minus 20.81. So it is 44.99. So this is 44.99. And lastly, 149.86 minus 149.59. So the gain of 27 paise multiplied by 67.15. So it is 18.13. So cumulatively, if you add 44.99 plus 18.13, so it is 63.12. And if you take this, is this. So this is what the gain we have realized on this investment. So our overall gain for these HDFC mutual fund is 63 rupee, and your account is also showing this much amount of value addition to it. So this is how we make NAV analysis for your mutual fund in M2M analysis. So this is one example what we have done with it. And I would take one more example now, the second example, and we'll have a discussion on this again. It is a short one, but anyhow, we'll make it accordingly. So NAV of Reliance Debt Fund is now trading at rupees 14.27 per unit, and you have decided to invest a lump sum amount of 5,000. So we have to make a M2M analysis for this problem also. So we go back to our analysis what we did, and we'll make the analysis accordingly. So we have to do these things. Okay, so the given amount of investment is 5,000, and your present value of NAV is 14 rupee 27 paise. So what is calculated over here? So 5,000 divided by 14.27 will give us this one. We don't want these many decimals, so we'll take only 2. So we're going to have about 350.38 units in our account. So again, this one, that is value this this, and it is 5,000. So this is what the opening balance and the number of units what we have owned. Now the change in NAV we have to do accordingly. So it is P1 minus P0 and all. So we make this schedule. So open is 14.27. So there is no change. Gain and loss nothing is there. Cumulative gain loss nothing. Bring it this NAV M2M analysis for this 5 days. So it is 14.30 minus 14.27. So the change is 0.03. It's like this: 14.3 minus 14.27. So it is 0.03, and multiply by 350.38. So the gain is this much. Amount will be 5,010 rupee 1 paise. The second day, again the gain of 2 paise, because 14.32 minus 14.30. So 350.38. So it is 7 rupee is what our gain is. So we have to add it to it. So it will be 17.51, and this will. Now here the difference is 1437 minus 1432 is 0.05, and we have got 350 units, so it is 0.05 into 350.38. So it is 17.52. So this we have to add up. 17.51 plus 17.52. So it is 5.03. So 5,035 point. Here there is a gain of about 2 paise, that is 39 and 37. So if you multiply with it again, we'll get the same. So it is the 8 will give this much. So it will be 42.03. This will be 5042.03. And the difference is this, and if you multiply with it will be 10.51. So if you add to it, it will be 52.54. If you do this, 52.54. So this is what the gain we have realized with this. The gain will be about 52.54 rupee. So this is how do we do this M2M analysis in the NAV computation. So we have got few more exercises. Exercise 3 is applicable to Axis ELSS, and this exercise example for IDFC debt fund is applicable to this. So you can practice both these examples, and even additional examples I will give it across. So this is how we make this M2M analysis when it comes to your NAV profitability analysis as such. So this is all about it, and I would wait and conclude over here. And in the next class, we'll discuss the further computation of net asset valuation of mutual funds. Thank you, everybody.